Hello again, everybody. This is Bob. Recap of corn and soybeans and a little bit of wheat last week. Uh, all three markets had a very nice rally. Corn extended its incredibly large 25 and 3/4 cent range, another 5 cents so far this year to the upside. We got all the way to 409. 404 was the previous high. Kind of a pathetic show there. The 3-year average range has been shrinking over the last several years. If you go back 12 years, the yearly range in the December corn from January 1 to first notice day has been over 200 cents, well over 200 cents in the last 10, 12 years. The last 5 years, it shrunk down to 194 cents. In the last 3 years, the average range is only 144 cents. But we have a 30 and 3/4 cent range so far in the December corn, so we have to ask ourselves, where is that going to come from, and how much of that can we expect to the upside, perhaps? On the downside, our low for the year is 378 1/4. It's hard to get excited about selling a corn market under $4 really, and especially as you approach the 370 mark in December. It's kind of hard to push it a lot lower than that. It can go to $3, yes, but you would have to expect that a lot of the range for corn would be to the upside. So we're still kind of hopeful for a weather event. We are getting back our gains last week because of rain in the forecast. We'll see if that rain actually does take hold. And meanwhile, we're stuck right back at $4 again in the December corn. The November soybeans, similar story. We have 119 cents on the year so far in that of a yearly range, and typically we get 295 to 300 cents in that market. We have 40% of that. I guess we can't complain about that. In the December wheat, the normal is over 200 cents, and we have 64 cents so far. So we're looking forward to extending those ranges at some point this year, and hopefully it would be in the month of June. In the month of July, we've been saying that this is a transitional period seasonally. The first week of June, especially the last couple of weeks of May, the first week of June especially, are a time when we look for certain clues about the market transitioning into a summer volatility period. And we got all of those clues last week. We got extended ranges to the upside, and we got short covering in the option markets, and we had number 3. We had we'll call them the summer crowd that comes into the option markets and does long option strategies. So we saw all of those things happen, and so we are well on our way to a weather market in this summer. I hope for the best. We're starting out lower this week because of the rain, but we'll have to watch that very carefully and trade accordingly. Thank you. That's it for the day.